This is Scott Becker with the Becker Business Minute, the Becker Private Equity Podcast. One of our subjects today that we'll talk about is consumer savings and the potential impact on a looming recession. So there's a number of things that have happened over the last year that have led us towards a potential recession. The biggest issue that's front and center has been inflation and the Fed fighting inflation. The Fed's raised rates so much in the last year with the intent to slow down the economy and take down what was viewed as almost hyperinflation of almost 10%. In doing so, they expect that will soften the job market some and put ourselves in a position where we're closer to sort of at an equilibrium where inflation's rational and interest rates are rational and the job market's rational. They seem to be doing a good job of slowing inflation, though it's still ticking up some. But you've got two big looming threats. One thing is that the economy is being propped up somewhat by just the massive expansion of government debt over the last 10 to 12 years. We're up to $33 trillion. And you have to remember, every time the government expands debt, in some way or another, that's putting more money in the economy that does ultimately support jobs, does ultimately support us from being in a total recession, but on the flip side, puts us in a position where we're more fragile as a government, ultimately not having the money around to pay the bills that we have and so forth. So that's one issue. The second big issue that we're facing in terms of the overall economic situation is the consumer situation. We're suddenly at a spot where consumers who were so flush with cash during this very difficult pandemic situation because of government stimulus, because of the stock market rising and so forth, are suddenly find themselves borrowing more than ever before again, buying things on margin again, and also in a spot where more Americans than in a long time are tapping into the retirement accounts early. These are very daunting signs. The challenge of being over indebted as a nation, as an individual, is you become more fragile to changes. Something goes wrong. Layoffs ticked up in January to 100,000. That still is a manageable number when you have 11 million jobs open. But if that number continues to tick up, suddenly you see Americans that have a lot of money that's on margin, that's in debt, living much more paycheck to paycheck, in real trouble if the economy does slow. So a very precarious situation that we're facing. And you've got the situation where both government debt going up, it leaves the government less able to respond to these challenges, and interest rates going up to fight inflation. So a mix of issues that leave us all just a little bit more fragile if something goes wrong. Thank you for listening to the Becker Business Minute Podcast, the Becker Private Equity Podcast. We hope you enjoy this. We hope you find it interesting. I certainly do. I'm thankful to our brilliant listener for the question about the economy, consumers, and where it's going. If you have a question or if you want to receive a $50 Amazon gift certificate and you're the first person to text me at 773-766-5322. That's Scott Becker, and we'll send you a $50 Amazon gift certificate. Thank you for listening to the Becker Business Minute, the Becker Private Equity Podcast.